from the CCPA, Canadian Centre for Policy Alternatives, from Ottawa. You wrote an article on the Monitor, the magazine that your office produces, and you're talking about the austerity model that by cutting government services, we're really doing a disfavor to our nation, especially when we need more. Can you just expand a little bit on what's the problem with austerity budgets?
Sure. Well, that article actually comes from the introduction to the alternative federal budget this year, the macro section of it anyway. And so one of the issues that I was concerned with for this year's alternative federal budget was that governments are becoming part of the problem and not part of the solution for slow growth. And so what we've seen over the past couple of years and what we're likely to continue to see over the next couple of years is instead of seeing, say, real growth at 3%, we're more likely to see it at 2 or 1.5%. So it can be a fairly substantial decline in economic growth. And one of the reasons for that, I mean, there are some external reasons like exports declining. But interestingly, one of the reasons for it is also that governments are spending less this year than they were spending, say, last year. And in that way, governments themselves become a fiscal drag and start to pull down economic growth because they're cutting back this year compared to last year.
You talk about the gross domestic product. What is the problem with the gross domestic product, which lead us into economic growth? The premier here of this province, Christy Clark, mentioned very often the word economic growth. We need economic growth. That was almost like a mantra. And I wonder if you can explain a little bit of what's the relation between this gross domestic product or GDP and economic growth, and why is it good or bad, economic growth?
Right, so gross domestic product is a measure of economic growth. Well, it's a measure of the size of the economy, and the change in GDP, or gross domestic product, year to year will tell us how much the economy is growing or shrinking. And so one of the reasons why you might want economic growth is that it can lead to increased wages for workers. It can lead to increased employment, and over the long term, it improves standard of living for Canadians. And so the challenge that we're facing today is that our economy, and this is Canadian-wide, but it's also specific to provinces, our economy isn't growing as fast as it used to. It's certainly not growing as fast as it did in the 2000s. And so what that means is that because it's not growing as quickly, shocks to it or changes to it may well result in a recession that would throw people out of work and would decrease wages, for instance. And so that's one of the things that I'm concerned about, is that because the growth in GDP has been substantially reduced, likely for the next several years, that'll be a problem going forward.
The growth and the general economy, but you also talk about a difference between the individual growth of wealth. So not necessarily that economic growth is going to benefit everyone. So you had some numbers there about the economic growth of Canada compared to other GDP countries, as well as the individual economic growth.
Yeah, so what you can do with economic growth is you can get what's called GDP per capita. So it's the amount of economic growth that you see on a per person basis. And so the reason why you'd adjust it for the number of people is if you have really fast population growth, you need fast GDP growth to keep up. And so when we compare Canada to other countries in terms of GDP per capita growth, we're certainly not dramatically outperforming other countries like Australia, for instance, or Germany. And we're certainly not outperforming some of the developing countries, which have seen much more rapid growth on a per GDP basis. And so, one part of evaluating economic well-being is whether GDP growth is increasing or is being maintained at a relatively high level over time. Now, of course, the other issue is that if that growth isn't being shared equally, then you have a problem in terms of distribution. So it's not only that that it's good to have growth in some sense, but that growth also needs to be shared among everybody. So if our economy is growing because the 10 richest percent of the people were making more money and everybody else was making less money or the same money, well, that's not really a benefit for most people. And so GDP growth is an important measure, but it's certainly not the only measure, and it can't by itself tell us whether economic growth is benefiting Canadians in general or not.
So you're saying we can't measure it, or you have the numbers to say that the economic growth is happening in Canada, but the per capita economic growth is declining. You have some numbers to prove that?
Well, yeah, certainly we can measure economic growth, and we can measure economic growth per capita, and GDP growth is not negative presently, although it's certainly not at 3%, and it's not expected to be negative over the next couple of years, which is the technical definition of a recession, but it's not expected to be particularly strong either. Now, once you start adjusting it on a per capita basis, we are still seeing some positive per capita growth, but it's not nearly at the same level as some other comparable countries like Australia. And this also delves into some of the other issues around economic inequality, for instance. So while GDP per capita just divides and assumes that everybody in the country gets the same proportion of GDP. Now, obviously we know that that's not true. And so once you start to look at some of the income inequality issues, then we find, for instance, that big cities like Vancouver, Toronto, and Montreal have seen no real, the bottom 90% of the people that live in those cities have seen no real income growth over the past 30 years. And in fact, have seen big decreases in the case of Vancouver. Vancouverites, the bottom 90% of Vancouverites, make about 14% less today than they did in 1980. And so that kind of distributional impact is important because it's not just about GDP growth, but it's also about who gets that GDP growth.
And you think that that is affected because of austerity, because government is spending less on social services?
Well, income inequality is going to be more related to tax rates. It can be offset by services. And so if you've got higher tax rates at the high end, so you might have high pre-tax income inequality, but the taxation and income redistribution, as well as social service system that governments implement, will offset income inequality to some degree. Now, that being said, once you enter into a period of austerity, you'll often end up with, in the case that we've seen, you'll often end up with smaller government, which is going to mean fewer social services, fewer income redistribution mechanisms, and therefore it's much more likely to exacerbate pre-existing inequality than to act as a lever against it.
So you are saying, in fact, that extreme austerity causes more inequality and economic per capita economic growth.
Yeah, it can certainly do both of those things. And if you're cutting back on income, so if you're cutting back on taxation on the one side, and if you're cutting back on social services and income redistribution on the other side, both of those will impact after-tax income inequality and will inevitably make it worse and make Canada a less equal place.
Okay, now you have another point here in your paper on the magazine that says the corporate party continues. Provincial tax rates are the lowest ones and among the GDP countries and all that. Can you expand on that a little bit? Exactly what do you mean, and how far below we are from GDP countries? I mean the G8 countries.
Yeah, I mean, this isn't. I don't know that this is actually generally known among the Canadian population. I mean, there's been two very big changes in taxation in Canada over the past, well, since about 2000, so over the past 12 years. The first has been a 2 percentage point reduction in GST, and the second has been a halving of corporate income tax rates. There has been some changes on the personal side, but not nearly to the same degree. And so what that means essentially is that corporations pay half of the tax rate that they paid in 2000. So you imagine, if your personal income taxes were half of what they were in 2000, that would be a fairly dramatic change. And that's in fact exactly what we're seeing on the corporate side. On the corporate side, those tax rates are half of what they were 12 years ago. Now, what's interesting here is that that's a fairly dramatic change. It's going to impact treasuries across the country. You're not going to bring in as much money if the tax rate's lower, obviously. Now, one of the most tangible direct results of declining corporate income tax rates in Canada has been a dramatic increase in in cash holdings for corporations. So the theory that corporations, well, the argument that corporations have always made was that if they're allowed to keep all this extra money, they're going to invest it in companies, they're going to train workers, they're going to improve productivity, buy better technology, and so on.
That's what the excuse for corporations to say we if we pay more taxes, then we wouldn't have enough money for research and development, and you're saying that's not the case.
Yeah, and so that hasn't happened. One of the most tangible impacts of lower corporate income taxes in Canada has been a massive increase in cash holdings for corporations.
They're just hoarding. They just hoarding that money. And the paradoxical thing that comes to my mind is, it's funny that we owe as much money as they have collected, and the banks. I'm reading between the lines here that people are paying, and that's why we're getting in debt, paying for the profits of the corporations that are making it. Is that a fair assessment?
Well, they're getting into debt because the housing market has increased in value so dramatically since about 2002. So it's not necessarily going to corporate profits per se, or that connection is a little bit, is not, the debt isn't necessarily connected to corporate profits. What is interesting, and I think that here's the relationship maybe that you're getting at, is that wages in Canada have been very flat for a long time for most Canadians. Now, for the top 10%, that's not true. The top 10% has done fairly well over the last little while, and this moving away of the top 10%, top 5% of Canadian earners has created is continuing to create income inequality, where you've got the top portion of Canadians taking most of the income gains from GDP growth, and the rest of us staying quite stagnant. And so one of the ways that you keep up with, buying the latest things and so on, is that you take a line of credit against your house. Your wages aren't going up, and so how do you keep up with the Joneses? Well, you do that by taking out a line of credit. Now, what's interesting is when you look at this from a GDP perspective, there are different portions that go into adding up GDP. One of them is corporate profits. That's a portion of our economy. Another of which is wages. And so what you can do is you can look at, as GDP grows, what proportion of GDP goes to corporate profits and what proportion goes to wages, and how does that change over time. And so part of this initial article for the alternative federal budget was to look at who's winning in this battle of wages versus profits in terms of taking up a big portion of GDP. And it turns out that since about 2000, corporate profits have been on the rise. So they are taking up a larger portion of GDP, and wages are taking up a smaller portion of GDP. And so what that means is that when we see economic growth, and this is the problem, that you can't just use GDP to look at economic well-being. When we see economic growth, more of that now is going to corporate profits, less of it is going to wages, and the portion that's going to wages is being split heavily by income inequality. So the bottom 90% are seeing a declining portion of GDP, and they're seeing a declining portion of overall wages. And so it overall spells a fairly bad picture for the average Canadian in terms of ever seeing real wage growth above the rate of inflation. So, you might get raises, but you're not getting raises above the rate of inflation. And when you see economic growth, most Canadians aren't sharing that economic growth because corporate profits are taking up a bigger portion of it.
So the economic growth of a nation can be increasing, while the individual, the per capita growth, as in fact is happening in Canada, can be decreasing. So it's not necessarily for the prosperity of the majority of people. Now you talk about, you say there is a better alternative, and of course the CPA has some suggestions on how to change it, how to manage it. And one of them is increase in federal tax brackets of 35% to people over 250, and you make some comparisons there of what used to be before and what is now, and also what's in other countries and what we're doing here.
Yeah, certainly. This doesn't have to be the path that we take. We can choose to to better fund social programs. We can choose to have workers to encourage a wage-led recovery. So you're actually seeing real wages grow for the majority of Canadians, as opposed to seeing them shrink or stay stagnant. And the alternative federal budget has a whole variety of measures to both raise income and take that income and use it in useful ways that creates jobs. And so on the tax front, one of the key ways that we look at is closing tax loopholes this year, trying to as well tax havens, so trying to close that loophole for corporations, change the corporate tax rate so it's more in line with what's happening internationally.
For a minute, when you say tax havens, it's not necessarily banks in Bahamas, but actually loopholes of corporations here in Canada. Is that what I understand? Tax havens you use.
Mm-hmm. Yeah, well, tax havens are in essence they're well, from the corporate perspective, they're legal. So it is legal to use tax havens. The problem is that in most instances, it's a means of bypassing the Canadian tax system for corporate taxes. And so what corporations do is they shift their profits to the Bahamas, where the tax rate's 2% or zero, depending on which tax haven you're choosing. They pay that very low tax rate, and they don't pay the 16% tax rate in Canada, despite the fact that that's one of the lowest rates in the developed world. Well, in terms of big countries, anyway. And so that shifting of resources out of the country to avoid taxation obviously costs the government money, but it's also lost resources that Canadian companies should be spending here in Canada or paying tax on. And so it's becoming an increasingly large problem. We talked a little bit earlier about cash hoarding, and somewhere around the neighborhood of about a quarter of that $600 billion that's being hoarded is actually in tax havens. So it's money that skipped taxation here in Canada, and it's now sitting in a tax haven in the Bahamas, for instance, or Barbados or whatnot.
So about $150 billion is because of loopholes of our own regulations.
Yeah.
And corporations take advantage of it and do it legally by shifting the profit somewhere else. You also talk about the tax brackets and I don't know if you explained it and it just went over my head. Tax brackets, you say that you would go up to 35% of income with 250 people that make $250,000 and over. There used to be in the past, I think 7 or 8 tax brackets. Now we have only 5. And are you suggesting that we should add another tax bracket for people over 250,000?
Yeah, that is in fact exactly what I'm suggesting that we do. With rising income inequality, I think that there's an argument that we make the tax system fairer, and particularly that we attempt to capture more of that upper end income. Now, the income that's gained there isn't it's in the billions of dollars, but it's not in the tens of billions of dollars. But that additional tax bracket, for instance, could pay for a reduction in tuition fees across the country back to 1992 levels, adjusted for inflation. And so there's really substantial and meaningful changes that we could make by introducing a new tax bracket. I think it would make the tax system fair, reduce income inequality, and at the same time provide some revenues for much needed programs in other areas.
So increasing in that tax bracket of 35% of income over people that make over 250,000 is one, and then you mentioned another one, which was the loopholes. Eliminating loopholes, you said, could create even up to $150 billion. That's not small money. $150 billion could pay a lot of healthcare and education. And then you mentioned also another one that says increase tax banks and other financial taxes on financial agencies. Why would you choose only financial agencies or not all corporations?
Well, there have in the past been differential rates for particular industries where they're either protected or subsidized from competition. The banking industry certainly qualifies there. They're protected from competition in essence in Canada. And they've been raking in profits from Canadian consumers. And so the sort of rampant gambling and other issues in the financial sector I think in this case, excess profits in a sector that continue to grow and grow and grow, I think makes the argument that the tax rates are too low in those areas. And so additional tax rates on the financial sector, as well as higher tax rates on the oil and gas sector, which is another piece of the AFB, attempts to slow down growth in some areas where we don't want to see that kind of dramatic growth. What we want to see is steadier growth, and we want to see a fair corporate tax system.
Pharmaceuticals would be another sector where it could be paying a lot more taxes because they're increasing their share of profits.
Pharmaceuticals. Yeah, it's not something that we look at in the alternative federal budget. So I'm not quite as versed on profit levels for pharmaceuticals and what they are and what they should be. But I suppose that's another area to look at, to be sure.
You said that France and Hungary have just introduced the financial trade tax, transaction tax. So you're suggesting that we should do the same thing because other countries are doing it and nothing adversely is happening there.
Yeah, it's a way of slowing down financial markets so they're not so that investors are in for slightly longer periods of time. In Canada, you don't have a differential rate on short-term versus long-term capital gains, for instance. And so financial transactions tax is a way of slowing down rapid trading on the stock market that's just straight gambling as opposed to trying to invest for the longer term and using the stock market as a means of creating capital for companies and building companies and so on. And so it's not a new idea by any stretch of the imagination, and it's certainly not exclusive to Canada. As you mentioned, there are several other jurisdictions that have implemented financial transactions tax. There's a financial transactions tax in effect in the UK as well, although it's not particularly well designed. So there are definitely other places where this is being done, and so it means that it's certainly possible for us in Canada to do something like that, to try to slow down speculation on some of the exchanges here, make them less volatile, and hopefully make them better for long-term investing.
Yeah, I heard that in Chile they had this transaction tax, and that produced exactly the effect that you're saying, that stopped the volatility of monies coming in and out of the country. So is it similar to the Tobin tax that some people advocate?
It is. The Tobin tax, I think, is generally thought of as a tax on currency exchanges, whereas the financial transactions tax would be a tax on stock transactions, bond transactions, options, and so on. And so, but it is a similar idea. The tax we're talking about here is very small. So you
fraction
think
of 1%.
Yeah, yeah. So you think of the GST as well, it was 7%, is now 5%. Of the transactions. But here we're talking much smaller amounts of 0.1% on transactions. So most regular people would never see, this, that it wouldn't impact their behavior. It wouldn't cost them very much. It's only when you're getting into high frequency trading where you've got computers trading, stocks thousands of times a minute, that would see a big impact. It would just make it dramatically less profitable to do those types of computer trading algorithms in Canada, and it would significantly slow down those kinds of flash crashes that are being driven by computers as opposed to long-term investors.
Yep, we don't have much time left, but I want to cover just one more topic here, number 3 on your agenda here, and says the alternative federal introduces smart green taxes, and that's something that I don't quite understand. Perhaps you can just give a short, simple explanation of what the green taxes are, carbon taxes are. What's the differences between what some governments have and what you're proposing?
Well, one of the biggest items in the alternative federal budget that falls under the green tax mantra is definitely a carbon tax, and so it's something we've been arguing for some time in the AFB at $30 a ton. It used to be that this was considered considered fringe policy or considered outside of reasonable policy. But now we've actually got a fair number of provinces that are implementing their own carbon taxes. So we see obviously British Columbia on side. There's a carbon tax in Alberta now. there's legislation in Quebec as well as New Brunswick for implementing these types of taxes. And so this is already happening at the provincial level. And given the nature of a carbon tax, it makes more sense to collect that at the national level, and so you don't see companies jumping from one jurisdiction to another.
Mm-hmm. And good. Something that you went just very fast, and your better alternatives, you say negotiating more free trade agreements has only weakened exports. Just briefly, can you tell how it has reduced exports by free trade agreements? I see Mr. Harper and Peru signing free trade agreements with Peru, and you're saying it reduces the trade itself or exports.
Yeah, well, what's interesting is that the destruction of the manufacturing sector in Ontario and Quebec, starting in about 2000, has and most of that a big portion of that manufacturing was outward facing. It was export based. And the impact has actually been that since 2000, we've seen a fairly significant decline in the importance of exports to GDP, declining from 30% of GDP down to about 20%, I believe. And so what that means is that over this time period where we're signing all these free trade agreements, the idea is we're going to increase trade and it's going to become more important. In fact, the evidence is that as we've signed more of these free trade agreements, exports have become substantially less important to the Canadian economy.
You mean exports in general, because I presume some industries might profit, like lumber, say plywood, if it's easier for us to make it and sell it, that industry probably would increase their exports, whereas the manufacturing of garments would decrease. So, but you're saying that in general it has decreased.
Yeah, there's always going to be in any average, there's always going to be winners and losers, but in the aggregate, this period of free trade adoption and signing a whole variety of free trade agreements with small countries we don't have a lot of trade with, like Peru or Caribbean countries, for instance, it turns out that the impacts have been very minor. And in fact, over that entire period, we haven't actually increased trade. Our trade as a proportion of GDP has dropped fairly dramatically. And so simply signing free trade deals is not a surefire way of increasing our exports and increasing our GDP. And so we argue, the authors that deal with this in the alternative federal budget argue that other much more managed trade relationships can yield higher exports as opposed to
free trade agreements.
A free trade approach.
All right. Well, David, thank you very much for your time. And
thanks for having me.
The last word, I think, is that austerity cutting services is not a good policy.
No, it'll likely reduce growth, likely reduce employment and job creation, and at the same time not solve the deficit problem that it was meant for in the first place, because there's fewer people paying tax and there's less economic activity.
Right.
And so, particularly now when Canada has low debt and can access debt markets at record low rates, now is definitely not the time for austerity. Now is the time to create jobs and increase wages. And unfortunately, that's not what either the provinces or the federal government is doing.
Yeah, I'd like to talk to you on some other occasion specifically about why is Canada have to borrow money, even if it's at low rates from other countries, when we could manufacture it ourselves here with the Bank of Canada. But anyway, we're out of time, and thank you very much.
Thanks for having me.
Bye-bye.